Accounts payable are bills a company must pay. It's the money a business owes suppliers for provided goods and services. Some examples of accounts payable include cleaning services, staff uniforms, software subscriptions, and office supplies. Accounts payable does not include payroll. The accounts payable process comprises 3 steps: purchasing the order, receiving the order, and paying the vendor's invoice. In other words, accounts payable is an accounting term for the money your business owes suppliers and vendors. All bills and debts, other than payroll, fall into this category, making it a critical aspect of any business. To ensure your business can produce consistently accurate financial information, you need a dependable accounts payable system. A streamlined and accurate accounts payable process will help your business with short and long-term goals and financial health. To create a thorough accounts payable process, understanding the key steps involved is crucial. Number 1. Purchase order. To initiate a purchasing process, the organization's purchasing department sends a purchase order to a vendor. Number 2. Receiving report. Once the company has received the goods or services purchased, a receiving report is created to document the shipment, including any issues and damage. And, number 3. Vendor invoice. Finally, the vendor will create and send an invoice to request payment for the goods or services purchased and received. When the business receives the invoice, it will note the payment terms and process payment within those terms.